love the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. And when I feel like this, I'm immortal. 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 Don't be scared. Just give me up. Don't be scared. Back. I won't stop, I'ma fight until there's nothing left. It's so what? You're gonna be hurting bad, cause I've been to hell and back. You don't wanna make me mad, I stay strong. You will never see me crack. And if you get in my way, you're gonna feel the wrath. Gotta say it to my face while he's looking back. Mirror breaks after math, when I hate, I attack. When I feel like this, I'm immortal. And when I feel like this, I'm immortal. 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 Don't be scared. Just give me up. Don't be scared.
Jeez, I didn't go to sound check or anything. How's it going, my peeps? Welcome to the episode 3 of Chart School. And this week, I keep wanting to go over the ideas that we did before. I just want to make sure that I got some of that information out there very well. We'll probably, just kind of refresh it and touch on those ideas quickly and then start moving on to a little bit deeper. But over in the Telegram group, and you guys should be familiar with the Telegram group if you're here in this section. It is it's a free group. It's a free private group over on Telegram. The links are in the description below. In the chart room area over student charts, yesterday I went through and I posted a lot of stuff from Bulkowski. It kind of started this guy, nothing personally against him, but some of the things that he does, and I only know we were in the same trading group. I didn't know this until after. He was an admin over in that group, and we post some charts over there. But I never knew him when I was in the group, but knew him afterwards. But man, we got such a different take on the market on some of these things. But he's big on doing, well, he's big on flags and measure moves and things like that. But his measure moves are, they're kind of wild because he will take them and move them around, And it's just, I don't know, it's just some ideas out there that's not in line with traditional TA. So, but if you do follow the traditional TA, if you follow and see how I use it on my channel, you can see we can be pretty damn accurate when it comes to to identifying tops or reversal pivot points, and in other words, nailing the tops. And that's a very hard thing to do for most people. Even if you can identify it, even if you can chart it out and identify it, I mean, to execute it is even harder. Unless you just want to set a limit order there and just wait. That's the easiest. That's the only way I found to actually really do it. If you're watching it, you'll miss that in most cases. But there are ways to do that, and Thomas Bulkowski goes over a lot of those ways. I learned a lot of those ways from him, and then a few ways from some other sources that kind of overlap. But it's kind of the things I was wanting to get into today. But going back in the Telegram group, I did post some stuff there. Going on this, I was saying I don't agree with his methods, because what he does, the method that he teaches, it teaches an automatic bias. You know, as soon as you get a candle going up, you're going to try to draw a flag pattern. He's throwing up trend lines that aren't even valid trend lines. And I mean, I understand what he's trying to say. I don't know that every new person would kind of take it that way, or somebody trying to learn this would take it that way. But as price goes up, it's going to do something, right? But it can also come straight back down. I mean, there's other options than just the two that he gives. But anyway, that kind of led to this discussion about measure moves and this and that, because he's already taken a measure move before you even know what the hell is going on. So what I'm gonna start out, I believe, going over just some basics of trend lines from Bulkowski. On finding support resistance. This is some good stuff, and it's a little different from what we talked about. I'm talking about finding, you know, the candle bodies and everything, but these are some other ideas to help you identify when you have found support and resistance, or ways to do it. These are other methods. So I want to quickly go over these now, and hopefully, yeah, I think can you guys see that? I gotta turn on more light over here. Have we got people in the chat yet? I keep waiting for people to show up. I see 4 people so far. Let's see, we got Road Glide. Let's see who all we got. We got Road Glide, got Glittery Marshmallow. How did I screw that up? Glittery Marshmallow, Jay Rodriguez, Board PC Guy. Hey, welcome guys, glad to have you here. Bobby Yaz, good evening. All right, well, let's get this party started. All right, so here's some Bulkowski wisdom on finding support resistance, because that's what we focused on the first couple of streams, right? And I was just showing the way, and I still don't feel very confident that I explained that very well, because I use support resistance. Let me go to the charts real quick. I use support resistance every day, but as I've grown, or as you know, as I evolve on this journey or whatever, I've come to realize, man, my fibs do a better job of it than I can do. And so I kind of let the fibs take over that aspect, but it's always there when I'm looking, even when I'm using the fibs, because I'm looking to the left. For instance, here's a good example. If I pull a Fibonacci from swing high to swing low, and when pulling this is to see where we'll find resistance on this upswing here. All right. That's what this does. It helps identify those areas, or key areas that we need to get above to signify bullish momentum. And that's the fibs in a nutshell, but they got a magical quality. We'll get into that. Man, that's going to be a whole rabbit hole to dive down. It's not going to be too complicated, but it's just, I mean, it's just amazing when you see how fibs apply. And I'm like, how can I apply this to other areas in my life to make life better? Because this is some wild stuff that you learn. But anyway, when we're looking at these areas that we're going to pick for targets, 618 being a notable favorite right there. I mean, it just is, and look, it just always works. Anyway, but we look to the left and see, we pulled this, and we look over here and see how did it line up? And these are great areas of support resistance. The other way to do it is, you know, you're eyeballing it. And it's basically the best ones that I've found when it comes to support resistance and identifying is the point where there's where it's been flipped. It's oh my gosh, I can't. Why the word is leaving me. Oh my gosh, is my brain deteriorating as I get older? I think it might be. So we got support areas, but this was a resistance area, right? And so this whole little guy right here is really strong. We got dotted lines. Let me get a big fat red line right there. So these are like support resistance flips, and I use a term, and for some reason my brain is not thinking of it right now. Maybe when you guys will know it, or maybe we'll just keep on going without it. But we come up to it, but it's also support here, right? So those are some of the strongest ones when you find where they act both as resistance and support, and it just goes right between them. Here's another one. Now over here it was resistance over here and resistance here, so we'll get that one. And then we see it was forming some support. Now they're not always going to be beautiful. You may not always see the perfect candle body lines up on some of them. This one was really good. I like that one a lot. This one, you can see that this is an area. So we just throw a little horizontal line there, and there's your basic areas of support and resistance. Always, you know, this top is definitely going to be one. This little guy over here, definitely going to be one. You can choose to go from the, I mean, you can, how you do this is kind of subjective, right? But overall, I mean, we all get around the same areas, whether you're going from the tops or the bottoms. But there will be something. Oh my gosh, I can't even, there's too much red on this chart. We got to turn the moving averages off, I guess. It's too much. Let's turn the fibs off because that's too much. And so this is what it looks like. And we did that from over here looking at these, but this carries on into the future. That's what's so beautiful about any kind of line that you draw when you connect these points. That line just keeps going on forever, and price can have a reaction there. Sometimes it may go blast through it. I thought you said it's going to have a reaction, but I mean, it's a rule of thumb, but you will usually see a reaction, especially if it's an area that price has stumbled for before. It's like price has memory or something, right? And so all those lines did very well in predicting places that we were going to have hiccups in the future, right? It even came up here and got rejected here first, if you can see that. Went up, it got found resistance, and then it started doing this and then popped up above it, and then it flipped it as support. And then we start losing it and bangling around. So I lost it as that idea. So we got these kind of ideas for support and resistance, but let's go over and let's see some other ideas for finding support resistance that maybe you hadn't thought about, or maybe you have and you just hadn't thought about in a while. But Bulkowski on finding support and resistance. And this article is just a short little article. And I think I shared this. Did I share this one over in the Telegram group? If not, it needs to be there. Round numbers. Think about that. These are psychological support resistance areas. So areas like 50, 60, 100,000 for Bitcoin, 110,000 for Bitcoin, 101,300 for Bitcoin. Ends in zeros. Numbers ends in zeros. 1,569,002. I don't know. 1,050. I don't know. Just trying to think of the 3 or 4 digits. 340, 350. Any area ends in a zero. Even on a 5. Even on a 5. I mean, some of us consider 5s to be areas. And what that means, if I can go back to a blank piece of paper here, that you got an area. Here's one at 200,000. I can't get the exact number, but it's at 200,000 here, right? Well, any number that ends with 0 and even a 5, those are some of the easiest numbers that we think about psychologically. And so what happens is that you got a bunch of people and they stack their orders there. Well, you're just in this big liquidity pool right here, just stacked up. And only the first ones that put their order there first, which is probably not even a human, probably a computer that did it, they're going to get their orders first. You know, the market makers, whoever, whatever, however they're doing, they're going to get their orders first. As we come up to that 200 or whatever, let's just say it's 200. This little level is 200. As we come up to that 0 price point, that price point ending in 0, those orders are going to get filled. And if there's not enough momentum to keep us going, let's say, yeah, that's the pivot point. That was your sell target, man. Gonna nail it right there. Yeah. And then your order didn't get filled. It hit it, but your order didn't get filled. What the hell? And so then you get people front running. So, and that's the answer to that is, you know, instead of going at 200, maybe you go 190. Some people would go 198. Some people might go 199.93 or something like that. Put a little decimal, but it gets it underneath that $200 area. And then this is also a partial explanation for how come, sometimes you will see a target. Where you have a target. Sometimes it happens with fibs. Fibs a lot. Not a lot. I see them get hit more than not, but sometimes they just come to your target or support resistance, and they just fall shy before getting resistant for bending over. Right? It's like, it's so close. It's just $1 away from getting hit, or what came $1 from liquidating me? Oh my gosh, those kind of scenarios, and that's where there was so many sell orders stacked up here at this price level and front running it, and they were front running. And then we get price action going up and get all the front runners, and we don't actually make the target. And so in this case, I would take that as an extra sign of bearish activity. If it was coming down for support, price was coming down, and we didn't get it, fib level, and we start bouncing, and then we start going on a merry way, that's hella bullish. That means there's so many orders, people buying here. They even front run the idea, and we didn't have enough downward momentum to go all the way down to the bottom target. So I take these as bullish and bearish signals in themselves, whether we actually hit an actual measure move or Fibonacci or a good support resistance level. And those are some things to kind of throw in on the back burner, how you read that, how you interpret those ideas. Because the charts are talking to you. Every little move that the charts make, they're talking to you. They're telling you something. And if you just ask the right questions or just open up and listen and try to listen, you'll start seeing these things. The moving averages are wonderful about that. I love the moving averages. They're awesome. All right, so getting back to Bulkowski. So, point one. Okay. Often people do not buy or sell at odd numbers such as $8.93. Rather, they use round numbers, $9. Traders know better and use oddball numbers, especially when placing stop losses. Another great one to remember this rule. You put your stop loss in a 00 number. I don't know. Maybe you'll get hit, maybe not. If you go, use an oddball number a little lower than what your 0 number is, or number ending on 5. If many people enter or exit trades on round numbers, those numbers act as support resistance area. Price stalls or even reverses there. They are a self-fulfilling prophecy. Since people believe in them, they tend to work. All right, so again, we're talking about finding support and resistance. So psychological round numbers, psychological support areas. Another one are valleys. Those are those dips. So valleys or bottoms are often places of support or resistance. And why is that? Imagine that you want to buy a stock or crypto. Price bottoms begin rising at a pace fast enough that you miss the turn. Now it's too late to buy because you're unwilling to pay such a high price. But when price drops back to where it bottomed last time, okay, I'll buy then. Well, others do the same thing, and that buying pressure causes prices to rise, and that's what forms a bottom. And that's how and why double bottoms form. And hopefully tonight, maybe we can get into looking at some bottoms, because I just think that's something I'm not seeing a lot of people talk about. There's all kinds of different bottoms to look at. Some of them are better than others, and that's when we start getting into more of the details of an Adam and Eve and Adam and Eve's, and some variations and things like that. But just to give you a little tip right now while it's fresh on my brain and everything, Bulkowski says that one of the best entries that you can get is the double bottom. If we were in the other room, we would throw a picture up there, but is the chicken still here? The chicken's still here. Hey, chickie, how you doing? Hey, girl. Hey, I didn't know I had the chicken on parade tonight. I don't have any characters in this room. Can you guys see the screen all right? Is that big enough? Because I don't see how you guys can actually see that. We can go to the other room if we need, or we can put it up bigger. Let me see if I can get some feedback on that. Let me see what you guys are saying. Roguelad, how's it going, man? Bobby is okay back here. Jay Rodriguez says that's great. You can take it to the future, and it should have a reaction sometime in the future. Swing something? Hey, Random Trader. Hey, there's Joe from Trade Intuition. Juicy bottoms. No flat bottoms, please. Actually, those are pretty good too, believe it or not. The longer that they stay flat, they're scarier because you don't know if it's dead or not, but if they stay flat bottoms, they don't know when, but that one day it's gonna. Random Trader says I can see fine with my glasses. All right, as long as you guys can see it, because that's just a smaller area. All right, so the valleys. All right, so what about and opposite of that would be the peaks. And he says for the same reason that bottoms show support and resistance, so do peak or tops. And he shows a cluster of them circled right over here, if you can see that. And basically what he is saying here for the valleys and the peaks for finding support and resistance is basically what we do with our trend lines, right? And here I am, where we on the daily for Bitcoin. So if we're looking at peaks, we got two. Oh my gosh. Okay, maybe we go to a smaller time frame somewhere. We're going to a nice clean chart here. So, I mean, and what he's saying from the valleys is this is a valley. Let's identify them. Let's take some time to identify our valleys. There's a valley, there's a valley, there's a valley. They're all lower, making lower lows and lower lows. And all he's saying is to find support and resistance, you connect the dots is basically you're drawing a trend line, connecting the valleys. Same thing for the peaks. And we're just connecting all those with the trend lines. So, and that's where we start segueing into trend lines. And look how beautiful when you do that and you're zooming out on a bigger time frame. It's just easier to get rid of the noise. There's times and places for all the time frames, even though for the 1 minute. Sometimes it gets a lot of flag, but if you're a day trader, if you're actually doing the day trading scalping, that is a time frame you want to be on. The only thing I bitch about is that's not what you want to be focusing on when you're first trying to learn to trade or trying to learn how to do analysis. You can use the 1 minute to, and I encourage you when we get into pattern trading to use the 1 minute because it just goes faster. It makes it less boring. You can turn that into like a little video game for patterns and measure moves and all that. We're getting there. Might even touch on it tonight. So here is our second way of finding support and resistance. Basically, is the trend line. Why didn't you just say use trend lines, Thomas Bulkowski? Well, I go, that's the wrong one. I guess he explains it even in more detail than I do, using valleys and peaks. I just got the backwoods method of explaining it. Well, and here we go, support and resistance trend lines. A trend line acts as a support and resistance lines. Why do prices trend? I have no idea. At least he's honest about it. Some speculate that it's a slight imbalance of buy or sell orders. Clearly this is true. But why does price hit a trend line and reverse? Good question. This could also be a self-fulfilling prophecy where traders expect a reversal at a trend line and their selling or buying makes it so. So we don't know why, it just freaking works, okay? I think it's God's math. That's just my opinion, but hey. Because it does this every chart everywhere. Everything that you learn here, it's not just for crypto. I hope you realize that. This works on every market anywhere. Commodities, securities, everything. If you can chart it, baby, this will work. I'm even charting my profit and loss statement over here. I'm like, that looks like an inverted head and shoulders to the upside. I hope it happens. It's crazy. But the thing to remember when it comes to this is just, zooming out. That's what I'm going to add to this, because when you zoom out and get the bigger picture, whatever you're working on looks, that's just a little part of the bigger picture, isn't it? I'm getting all worked up over what's happening here, and you can just zoom out and see the bigger pictures of things. Well, bigger pictures of things, I believe. And this is where we start getting into the channels and all that stuff, which I love them channels. Are we going up Bitcoin? We going to 118? We can do it. You can do it. I think you can do it. I don't know. Maybe. I don't have my angle just right here. We're just playing with some ideas here. All right. Let me get that off of there before I think, oh man, I meant that to be there. So using the valleys and the peaks, those are your support resistance. Well, let me go back on this because I have a tendency to neglect the horizontal that I mentioned earlier, that I've grown to rely on my fibs and all that. So we're talking about the peaks and valleys. Maybe we should go back over here where we were. Use that same very example and just do it a different way. I drew the trend line automatically, and that was his next one. That's my biases coming out. But these are the same things that you would be doing for your support resistance lines, right? And that's exactly what he's talking about is doing right now, is identifying areas of resistance and identifying these areas of support. I'm just going to the wicks. Now I wonder if we can't really see it play out anywhere else other than in futures, because we unless we come back down to 73,000, we might see these guys get hit. But those are the area, those are the ways, and it's the same thing. It's just a lot more of them. If you're identifying every one of them, it gets kind of messy. But in essence, that's what he's saying. So you would, same thing we did a while ago. Go with the juicy good ones. When you zoom out, that's probably what you'll see, right? These areas of support and resistance. And look, oh, that one right there. That's the one that is holding it, wasn't it? That's awful nice. So the horizontals, no, it is. Nice little SR flip line right there. All right. Back to Bulkowski. Horizontal constellation regions. Horizontal constellation region, parentheses HCR, which I never use that term, is a name I coined. We all love to coin names, don't we? We all got a little, I mean, I got a Dirty Sanchez pattern. It's a double bottoms, that's all it is. But, and yeah, I don't know. It's just however we can remember these things and associate them in our own minds. That's what's really important. Name I coined for price structures that tend to share bottoms or tops or both. There are areas that have a lot of price overlap from day to day, and sometimes, as in this case, they may slope downwards some, but stock enters the price level of these areas in the future and it gets stuck. Not always, mind you, but enough to make trading interesting. And that's also what he's talking about, is what we just looked at too. So I guess we got a good example going on. This area right here, consolidation. And then a lot of times they go horizontal. This one sloped downward, just like what he was saying there. And this gets into what we're getting into, channels or rectangles. Because after you draw trend lines, you connect those dots, well, you start seeing patterns form, right? Now, some people do not use patterns, but they do use trend lines. Yeah, that's fine. I find myself doing that more and more now a day these times. I used to look at people doing it, I'm like, you do that weird. Why don't you do the whole thing? Huh? And in time, you know, I say, yeah, well, you don't need to go through all these steps, so why go through all these steps? Sometimes you just start seeing them on your own. But when you're explaining it to people, it's helpful to go through all the steps, and hopefully I can remember to do all those nice curvaceousness. Nice curvaceousness. Remember your trend lines. You got support with trend lines. You got resistance trend lines. You got internal trend lines like this, where price cuts out of them, loses it, then gets back in it and respects it. That's an internal trend line. Those are fun. I like those. Those are neat. And then you got the very special weird one, which is the curved trend line, which if I can pull that, I only like this if I can pull this tool out and if I can draw it just as seamlessly as I did there. If I do that, then I trust it. Otherwise, I just see it as a subjective thing because you can make this. I can make this do whatever. Look, the banana zone right here. I told you guys we're going to the banana zone right here. I mean, you can make it do whatever you want to. I can make it go back here if I want. How's that work? Look. What? Okay, this is getting weird. All right. Anyway, so support lines, and you got your horizontals. You got your horizontals. You got your trend lines. Every trend lines, you also have an internal trend line, and you also got your curved trend line. So just a little refresher over that. Make sure I hit those points recently. All right, so now we went over that. Now what's some other methods of finding support resistance? We get into one of the ones I like is moving averages. But I mean, this can be they move. They're not like the other ones that stay constant, but these moves, and it's just an average of price. And when price comes back to that average, mathematically something just usually happens a lot of times, or it can. And then this is where we get into the basic moving average strategy. And the basic rule is the 200 daily moving average. If you're above it, you're bullish. If you're below it, you're bearish. And that 200, that's the rules for every time frame that you're on when it comes to moving averages, just so you know. So there's some people acting like they just learned it or something, or it's a main cornerstone for some people's trading things. I see. I just use it. You can build on that. It doesn't have to. You can use it for your trading strategy. Make a simple trading strategy. I see some simple trading strategies like that here on YouTube. Like for instance, applying it to the 1 minute time frame. The only thing you got to remember is that it crosses a lot on the smaller time frames. It doesn't cross as much on the bigger time frames. But on the smaller, like the 10 second, you're going to cross that 200 moving average. I don't know how many times a freaking hour. So you got those ideas. It's choppy, but if you like chop, if you need chop for your trading strategy, there you go. So moving averages, points A and B, that's this one, and where are you B? This one, these two bottom areas right here, where and it's got the 200 simple moving average there. Show price dropping to the price levels of the moving average and bouncing off it. Even the congestion area at C, which is B here, where it congested, or you just kind of respected it, stayed on top but lost it, is normally how we're talking about it. Even that point shows support and resistance when price spins around the line. It says if you were to change to an exponential moving average, you would find that price B, which is the second touch here on that line, would be below the moving average. Is there a way to blow this up? I might have a way to make this bigger. Can I make this bigger? I don't think I can. I can't, can I? Oh man, okay, I can't. All right, so if you were changed to an exponential moving average, you would find that price B, the second peak, would be below that moving average far enough you might be tempted to call it a miss, or you might say it as a sell signal or flip bearish. I show its approximation as blue. So the 200 exponential moving average, what he's saying, would have come up a little higher. And if you use that as your thing, you would have been, you might have had a different idea. Moving averages show support and resistance. Moving averages showing support and resistance are another self-fulfilling prophecy, but it depends on the popularity of the moving average, 200 day versus 170 day. Who uses a 173? I got a little kickback on that. And it may be a math thing, but I've found that the 666 and the 360, price respects them, and very few people use those. Unless it's in the founding of some kind of trading software that's out there, high frequency trading or something, unless it's like a common programming thing. There's no other explanation other than it just freaking works. So, and then another one is support resistance gaps, and you'll hear that a lot in crypto when it comes to CME gaps on Bitcoin, and that's where the trading halts on Friday. and the CME is not open until Monday. So we got the weekend where we can form gaps. Now in the stock market, I think that happens with after hours. That might affect it, or maybe a really just big price increase. But it's usually a time gap in between. And what happens is, well, let's get his explanation on it. Mine has to do with market makers. Let's see what he says. So a gap, and this is an example of the gap right here between D and E here. You see, we were here, and then we got gaps in between candle bodies. They don't connect anymore. There's a gap over here too, I see. So looking on the Bitcoin index, the CME futures chart is where we usually look for that on the daily chart for Bitcoin and kind of pay attention to that. And there's some gaps below us, our price level now. There's several of them that may or may not get filled. Some people have a gap trading strategy. Just throwing this information out there. All right, so this chart shows an exhaustion gap here at D. Price at E, which is composed of a couple of bottoms here, finds support at the price of the gap. That's interesting. So we're finding support at that gap price. That's a new support. Look at the breakaway gap at F. Now this is where it's broke away from. Price in the shift downtrend over here comes back to these areas, right? However, one could argue that point G does find support below the gap. Of course, price on the rise up from point B from here does not find overhead resistance set up by the gap. There's no resistance from that gap. So the gap things, it is something that I don't really use very much, but it is an area that is considered a support resistance to look at, where price can go back and reverse to. I discovered that gaps don't work as well as support resistance area. I'm glad he said that. For example, a rising window will support price just 20% of the time. In other words, expect price to drop right through the gap 80% of the time. What the hell's a rising window got to do? What? All right. And what I like about the pattern side, and I do this, and then I'm really enjoying this. You know, you got these little sections down here. It says "See also." Man, you can just go down a rabbit hole, learn more about rising windows. So it is a thing. Okay, I don't know what a rising window is. And falling windows. Well, let's learn about rising windows. Let's learn about something together. A rising. Oh, it's a candlestick. Okay. This is in the candle. He's got a section here. It goes over chart patterns. He got a section that goes over LA wave. He's got a section that goes over to candlesticks, like the Japanese candlesticks and their patterns, which I don't usually, use over. I don't have a lot of those committed to memory. I don't think you need to do that. I don't think he does either, really. You just read the candles. But he talks about the gap. Okay, so we're calling that. I just learned something new today. Did you guys learn something new? A rising window is that gap. Okay. The rising window is a fancy name for a price gap in an upward trend. It occurs when yesterday's high is below today's low, leaving a hole in the price chart. The pattern appears in a rising trend and it acts as a bullish continuation pattern. Rising windows often occur, so you will find them in the charts, but the longer time scale, the more difficult it is to find one. Well, that's interesting. And so here's some examples of the oh, I've seen that with Bitcoin before. I think they call that an island. Did you call about it? All right. Well, we're not here to talk about rising windows. I just wanted, but I learned something new today. I did not know that. Let us go back. All right. So we went over some of Bulkowski's wisdom on finding support resistance. Now, I think a good time to let's go over trend lines. He's got a little tutorial here, and it's just kind of easy. Just a trend line for uptrend lines, following the bottoms, the valleys, if you will. Drawing a trend line. This is real short and sweet. Man, do I gotta put more line on or something? I got some fuzzies. Get the fuzzies off. Fuzzy Wuzzy was a bear. Fuzzy Wuzzy had no. All right. All right, so here we're at trend line, and then it breaks the trend line. Below is a slider tutorial for drawing up trend lines. Captions appear below the pictures in red for guidance. It'll be clear to scroll far down enough to read them. All right, here's a quick review for uptrend lines. Begin drawing trend line from the lowest low in the chart to the highest high, so the line does not cut through price until after the highest. You mean highest low, right? All right. Step 1 says draw a trend line. Look for a pierce. I think that's a price. Price should test that high. It happens that D. Okay. Trend line is trend lines, bottoms, and then if the price is already done, it will cut through. Okay, so just know that you're following the trend line. And then D is what we're looking for a retest, right? All right, and now here, as he says, I drew trend line A through B here because I want to know when price drops below the trend line. Thus, the first rule of drawing upsloping trend lines is to draw them below price, not above it. So we do from the underneath. We're going with the valleys for the upward sloping trend lines. And we also use that when we're trying to figure out bullish divergence, and keep that in mind. When we're trying to track something going up, we're measuring from the bottoms. We want to see how far she comes down. And we want to see her coming down, all the lows to be higher than the last one, ideally, is what we're wanting, right? Touches spaced further apart make a more significant line than those that are close together. Modest slopes, say about 30 degrees or so, tend to be lasting and more significant. Now here we start getting into angles a little bit. That's worthy of noting. Modest slopes, say of 30 degrees or so, tend to be lasting and more significant. Steeper slopes and the trend lines will end quickly. Now, some of you know that, and some of you might be saying, really? And that's good information to have there. Your steeper trend lines will end quickly. They can't go up forever. That's what I'm calling, when you hear me talk about when trend lines mature. And here I'd be tracking through here, and it matured a little bit. I'd be connecting lines along the whole way. He's got some examples that's kind of similar to what I do too. So I tested all this, by the way, so I'm not blowing smoke. Of course, the aspect ratio, the ratio of screen height and width, will change the slope as we'll scale. So he's saying that, yeah, okay, that's a good rule of thumb to go by here, because the 30-degree angle, that's going to change depending on your software that you're using, right? So you're kind of, getting to a comfortable scale that you're using, and then kind of, we're guesstimating here, folks, because that does skews things. That's what he's saying. I'm decoding engineer speak. My technical analysis degree is finally starting to get somewhere. Yay. Did we lose her? Here we go. Tutorial. All right, here's an interesting thought that a straight line drawn on a semi-log scale will appear bowed on the arithmetic scale. This is something that that needs to be talked about too, and especially when we get to measure moves. Now you can set your charts. I recommend you set them to normal. Your other option is the logarithmic, and usually there's did they change it? They used to have a little button down here. Oh, right here. It says A or L, automatic or logarithmic, and just don't make sure we do it. When we do log scale, it just kind of it scales things. It's good for big ass. It should be good for Bitcoin. It really is. And a lot of people do use it to do Bitcoin, the log scale. But for measure moves, do not do it. It shifts stuff. It will screw up your measure moves if you use log scale. So I just want to get that out there. So we don't want log scale. But a straight line can look curved on log scale, is what he's saying. It does. It skews things. So we don't want log scale if we're doing pattern trading. See the difference? See the difference? This is what it looks like for real. This is what it looks like in log scale. It just looks like, and you can draw this big ass trend line. Watch what happens here. We draw a trend line in log scale. And then we get out of log scale. Oh, what happened? What happened to my trend line? It's still there. It's still got an angle. It's still got some stuff going for him. It's a nice little support resistance area. But that ain't what I drew. I drew it as support. I mean, and now it's giving me a resistance line. Isn't that crazy? So, I mean, they can screw things up that much. What would a measure move? I don't know. Let's say we took a measure move from here and we put it over here, doing something crazy. And then we mark a target. All right, let's put it on, that's on log scale. Let's put it on automatic scale. What happened? What does it look like on here? Did it do okay? We're on log now, right? Yeah, this is off log. And then we get something totally weird. Totally weird. I mean, it looks fine on log. Well, that looks totally doable here. Let's hit the measure move. $329,000 Bitcoin. Wouldn't that be juicy? But log scale, can you see how it skews the charts? You get it. So no. I mean, there's a time and place, and actually there's a time and place on Bitcoin for it, for real. But for what we do and how we do it with measure moves, no, just no, just try no. All right. So what other goodies can we get? The tutorial, we're almost done with it. And then here, draw as many up-sloping trend lines as you want. For help, click here. I think that was the, oh, here we go. So the trend lines, and this is similar to what I do, and I'll break it down to how you do it on scalping in the 1 minute. You're following the trends, right? He's doing the same thing. Main trend lines, secondary trend lines. And we're doing for the up slopes, right? Nice. So we got a 45-degree angle. I think this is, if I'm mistaken, I think that's our 30. Is that right? Is that correct? I keep getting them backwards on this. You're the 90. You're the 45. No, you're the 60. You're 60. 60 degree. My bad. 60-degree angle. Right? All right, here are the ones I found. The ones in red I prefer because the angles are more shallow than the green lines. Both colored lines have their uses. Remember that if the trend line cuts through price, the touch doesn't count. Thus, the first red line on the left, well, this one, has 3 minor low touches. 1, 2, 3. Only. The line on the right might only have 2 touches. Because the last price bar might continue down. We won't know if it reverses there or not until we see more of the chart. Let's draw more on the next slide. Okay, here's our next slide. He's going to do some more. He's going to do this in. Now here we got a measured move. Now that's kind of interesting. There is only one line to draw, and that's A, B, C. There's A bottom, B bottom, and the C area right here. Any other lines would not have enough touches. At least 3. You need at least 3 touches. 3 touches for a good solid trend line. You need it. That's the rule of thumb to go by. I wish he'd spelled that, but he did spell it out in here. For the trend line measure rule, that's when we start getting the measure moves. Look for the tallest distance from the line to price. Tallest distance from line to price. Measured vertically. Just take it straight down to your line. That is the distance from E, that's the bottom here, that's on the trend line, to the top of the line there, to D. Take that distance and subtract it from the price. That means just take it and move it down to where you have the breakout. All right. The measure rule says to expect the stock, or crypto in our case, to decline the same amount below the trend line as it gained above it. In other words, the movement from E to D should be the same as from E to F. And so we get a measure move, and look, it comes down price. Oh, look, you suck. You didn't hit it, man. Your measure move suck. Yeah, you see that, but then eventually it did. Now, could that be, maybe he could have moved it over here and nailed it? We got some ideas like that to consider, for real. But eventually it did get respected. It did another if you extend this line on out, you can see where it's got you came back up and did a bearish retest of that line and then came down. Here it did a bearish retest on the first drop, but sometimes they will come back up and do another one. Just some ideas to talk about. Here's our, now are we back to this one? Oh, did we start on the, I think we started on the last page, but anyway. All right, so that's good. Let's get that off of there. All right, now here's something. This is 7 tips to determine market direction. You guys struggle kind of figuring if we're going to go up or if we're going, what is their trend doing? Because she can be confusing sometimes, right? Or what direction is it going to go for the day? Let's think about that. We turn on the TV in the morning or YouTube in the morning. What's the analyst saying for today? Oh, it can do this, it can do that, it can go sideways. We're trying to figure out the direction of the market, and some people can do it, and some people just want to watch the 1 minute and they flip-flop every couple of minutes. You got to zoom out is the best thing. But here, let's see what Thomas Bulkowski says. Here are some things that maybe you didn't think about to determine the overall direction of where Bitcoin might be going, or a stock or commodity might be going. Here are his tips and guidelines that we should go over. First one, hey man, what are futures doing? Go to Yahoo Finance, look at the home page. I show a portion of it with the indices, boss. Now he's looking at the general market, but for us in crypto, we just, hey man, how's Bitcoin futures looking? There's a little bit. There's a little variation. I think it helps. It's more behooving on them for legacy on this, but that is that's a stock market thing. You look to see what the futures are doing, or commodities, how the futures are trading, to see how the commodity price will react, right? That's the wisdom. There is a difference in price a lot of times between futures and Bitcoin. I don't know if it's going to help us so much on the daily. Maybe you would have to really kind of peek that out. But I'm not aware of it right now. I'm sure there's a metric that follows that. And open interest is something else that we look at too, that kind of reflects some of that. So you hear us talk about open interest a lot when that's related to the futures. So that could be that's more of our clue in crypto, I believe, is looking at the open interest. Before the open, if values shown on the website are negative, well, then expect a lower open. Positive values usually mean that the higher open. The larger the values, the larger the move. I consider a large move as plus or minus 200. So interesting. So he's looking at the S&P 500, Dow Jones, NASDAQ, Russell 2000. Looking at those things and getting a feel for them during the day. How are the futures? Are they in the red? Are they starting out good and strong? All right, here's a market direction tip number 2. Look at the prior candle. Look to the left. Look to the prior candle. Before the market opens, look at the prior price trend. And at the last candlestick, if you see a black marble zoo or a closing black marble zoo. Now, what they are, black marble zoo candles are ones that don't have wicks. They're just a big old juicy candle. It means price got in and it was ready to book it to the target. There was no wicking by the time it closed, just a solid black rectangle, no wicks whatsoever. Why? Because price in the Marubozu candlestick is already tumbling a good clip. Another black one would be falling. Price is at the bottom of the candlestick after having opened near the top candle line. So it opened here and just fell all the way down. So the momentum will tend to push prior lower, at least for a while. The black candle should be a taller one, taller than most over the prior month, and appear in a downtrend with best price trend. Man, you're getting hard to follow, Tommy. I'm just saying. Best price trend being in a straight line run where price near the bottom of the candle becomes the top of the next, the gap lower. If price is moving sideways, let me see if I can summarize this. If price started an uphill run earlier in the day and moved sideways during the last hour, then the direction in the next day's session is less certain. Price could continue to run a measured move up type push, or the congestion region could be a sign of reversal. Read the other tips in this article to determine element. Okay. we can look at the prior candle and see if it's a strong one or not. If it's an engulfing candle, if it's an indecision candle, like a little doji. Let me see if I can kind of get a daily, and see, I use different candles, so not part of me thing, so I'm not going to be the best at explaining this as sufficiently because it's not one of my things. All right, well, if this was your daily candle, clearly that's not a good sign. That sucks. It's probably not going to be a good day. The previous candle probably not going to be a good day today, especially if the candle's starting out right where that one left off, and it wasn't. So that wasn't good. This one, how about this one? We go down and then we have a green candle right here, the first one, if you can see that. Not the big one, just the first one. We looked at the previous, well, looking at the previous day, right here, well, I guess we'll do that. This one is indecision, so we would expect probably not really knowing what's going to happen today, but it started getting a little green. Look at the previous day, and we started right at the top of this one, then we started getting a Marbosa closing candle. It's got a no wicks on the bottom, it's got a little wick on the toppy top there. And if we got one of those, and that's what Thomas Bulkowski was talking about just a minute ago, he used the black ones, but beneath it was the white ones, right? The bullish ones he's talking about. Same can be said for bullish moves. The bottom half of the picture shows two white candles, a white Marbosa and a white closing white Marbosa. Both show price opening near below the closing candle on the highest day. So he's got these candles following each other. That's what he's using for his example. I don't think it's the greatest, but he's saying if you got a nice strong candle like this, you can expect a, you know, similar price action. Or something. I mean, that's bullish. The white Marbosas are bullish. The bullish is get out. So getting another bullish candle after that would not be a no-brainer. I think that's easy. So here's his closing Marbosa, and then after that we got indecision, but the trend was still there. Just some ideas, people. Didn't say you got to use them, or you know, it's something to keep in the back of your mind. But these are some little tips, okay? Here's one. We see this. I see this one a lot. Long shadows, or the big wick theory. My, you got a big wick. Candles with long shadows sometimes predict change in direction. The non-candle version of these patterns is called spikes or trails. They appear after a move up, a single line peak that sees standing price standing alone, or after price trends downward. And bottoms in a valley poking through. So that you got a candle with a tail. Without going through his colloquy there, a lot of times some people call them wick reversals, or they look for wicks. This one's a great example for a bottom right here. This one's a great example for a bottom. Perfect example for a bottom one. That represents a lot of buy pressure coming in. So they tried to drop the price, made a lower low. Here we were leveling out, right? But here it went lower, but they couldn't hold it there. Instead, it got all bought back up. You can see with some volume. It's not even, it's not even a huge volume bar comparative to the others. I mean, it's good. It's better than what its neighbors, right? But it was enough buy pressure to just buy that whole candle up. And that is, a lot of people look at that as bottom reversal signs when you got that, and they can be. There's also this saying that what gets wicked off and gets candlestick. So you got it both ways, saying, oh, yeah. But I find that's usually in the direction of the price when we're doing that. But what got wicked, I mean, it could easily just come right back around and put some solid candles down here. It could have. But it's a nice, when you see a nice little green candle like that, a nice wick on it, it's usually a good sign. We got one right here going on with our last local too. A nice big wick. Here's a nice big wick right here. Came up, came back down, and we tested that around these areas where our candle body's closed, just a little bit below it, but that's mainly where we were testing, right? So you can look for wicks, and when we're looking for parabolic moves, like when we pull out that little tool that we had earlier, this little guy, when we're looking for this parabolic move, like Bitcoin is on the daily chart right now, is in the middle of a parabolic move. People say, we're getting ready to go parabolic. I'm like, we've been going parabolic. We're just seeing it play out really slow. It's slow as hell. But what you'll look for is for price to eventually come, and can we get our little drawing thing to do a wick, and when it'll get a wick, and then that will be we call it a blow off top. Usually 5 stages of this is what we hope to see. It doesn't play out that way all the time at all, but when it does, it's impressive. Is another stage, and then you get a blow off top, and then that move is over, ladies and gentlemen. That's it. It's over, done. And if you expect that, you can know that it's over and done early. If you don't expect that, well, you get to ride the roller coaster down and figure out too late that, oh man, bear market's here already. I missed it. So there's some ideas. Especially when it comes to parabolas, I think it's very well worth looking for those shadows as a sign. All right, so tall candle retrace. What's this one? If the candle is a tall one, expect a partial retrace of the candle. Okay, yes. For example, imagine price is moving up at a good clip. When the tall candle appears, next candle will sometimes price will rip back down. It's usually about halfway, showing an overlap between the two candles. Here he goes. Okay. Think of this movie as a Fibonacci retracement as it applies to the prior candle. Expect a candle to overlap between 38 to 62% of its previous height. All right, now for this one, what he is saying here, we can find an example that was unintentional. Here's one. Here's a good example right here. So you got this big ass candle came out of nowhere. We blasted to the upside. Well, the general rule now, Dow theory says that we come back to a 50% retracement. We should come back at least here. And here on the shorter candles, that's exactly what we did. Bulkowski's saying that you can go anywhere from 38 to 62% down. Is that what you're saying? Me for this candle move here. Let's see, this would be 62% right here. This is more 78. Expect price to overlap between 38 to 60% of the prior candle height. I just what do we? No, don't leave. Did we lose it? I mean, that was a deep retracement for that candle. You can get your fib out, and I think that's what he was alluding to. Well, we did do that on ours, didn't we? We did get our fib out. The general rule is that if you get a really big move candle, you expect at least to come out halfway. And I would say you even on the whole move, even if it's not a candle, that's just a general rule of thumb. You get a big move up like that, you can expect it to come at least halfway. And then that's exactly what we're doing with the fib strategies. We're just pulling our fibs out and figure out where the retracement's coming back. And with our fib strategies, I mean, we depending, that tells us the strength of the momentum and everything. Now I guess we can start getting into, let me come over to the chat and see what you guys are talking about. If you got any questions, comments, or saying, oh man, this stuff is too boring. I know reading over some things can be boring. Believe me, I know that, but there's some good information in there. Some of it applies more to us. Some of it doesn't apply as much, in my personal opinion, but it's still good information to have in the back of your head because you may need to pull it out sometime. Red angle is closer to 30 degrees, I believe. And green to 45, I believe. I believe so too. Joe says, I love watching YouTubers that say price will go up or down or sideways or have an 80% accuracy rate. Legendary. Yeah, there's a lot of that going on. 80% of gaps are filled lower, so maybe we get to 75, 76 one day. I think I hope we missed that opportunity now. I think that should have played. It should have played. And it seemed like a lot of people were calling that out. I know one source that I was looking at, but then a lot of other people had those same targets too. And you could see it on the charts. I mean, it was definitely there, even with our fib strategies. Those areas are there. But the window of opportunity for that to happen looks to have passed, and I hope so. We still have 2 steps. Ryan Case is not boring, very informative. All right. So, are these going to apply? Market direction tip number 5, reversal time. Once the session begins, keep an eye on the clock. Why? Because price often reverses 15 to 20 minutes into a trading session. So by trading session, what he's talking about is the New York session, which starts at 8 a.m. Eastern Standard Time. It goes from 8. Let me type it out. So he's saying within 30 minutes there, you can see something happen. And a lot of people, I mean, listen, a lot of YouTubers time their shows with the market open. I thought it was, why do I have 8 a.m.? Maybe that's when the session, there is actually indicators you can get for that too. Let's see, sessions. Trading sessions, that's probably the easiest way to do it without me scrolling. I think I had it up there. I think Trade Travel Chill put this one out. I like her, she's cool. And there's other indicators that do this. Let's see, where am I at? Am I on, I'm on Kraken, man. Is it not working anymore? Well, I guess that one doesn't work anymore. Here's one with Lux Algo. What do you got? Oh crap, what's this? That's too much stuff. Oh man, that's too well. This, yeah. So like every so many hours, we'll just use this as a. Let's go on a 15-minute and see. Let's test it, because he's saying that. It says if you're looking to buy or long when price has been moving up since the opening and it is 15 minutes into the session, then it's almost suicide. Wait for price to reverse and go short. Same with the strong downtrend on the open. Expect a reversal 15 minutes into the session. So he's saying that often price will reverse in those sessions. Now, sometimes just depend on which one. Usually, US, and then when Asia comes on, sometimes Asia will have some effects there. So I'm trying to get, okay, so we can kind of zoom in on this. So Lux Algo, when you zoom in, they got the sessions here. This is Sydney. This is New York right here. This is New York. So is it true? We're on a downtrend, and then when the New York session opens here, boom, it reversed. A lot of people trade the New York Open, and like I said, you know, in 9, 10 to 12 in the morning, very, very popular for YouTube. A little late to the opening of the sessions and everything, but still enough where you can catch the move, because usually the New York session, I mean, from opening to about noon, that's where your move lasts, and then after that, I mean, it's about every day. The trend kind of changes around then. Sydney comes in at who's next one? 8 a.m. and then yeah. Sydney's the next one. And we're coming down, and that's a little bit. We're on a downtrend here at the end of New York session, and I come with 50-minute candles here. So that was within 30-45 minutes. Trend changed within the session changes. Let's see, this was Sydney, and then Tokyo overlaps with that, so that's kind of interesting. Nothing happened with Tokyo other than come down, but we're looking for things that will change. Downtrend here, and then London session open. London moves markets. From what I understand, London kind of sets it up, and then the US carries it through, or something like that. The finagle it hand in hand. So we're downtrend at the end of this session, and then a few minutes after London opened, we did. London closed here. New York, here was the New York Open, and I don't know, it was more sideways, but you'll see more pumps in New York. So that's the idea that he's saying, that within the first few minutes of a session opening, you know, if you're in a trend, it could reverse. You could go the other way. It didn't happen here. That's London, though. New York, though, is a mover for most things. Here we were down, but New York just continued it. Or, well, you were going up. You were looking like you were going up after you flushed everybody out, going up, and then New York session, and it dumped. Okay, I can see that, but you're still in a downtrend overall. Just some ideas. These are kind of more, you know, you might find them useful, might find them helpful. Let's get this indicator off of here before it drives me crazy. We're going to change the music. Hold on just a second. I want to do it the easy way. This wasn't the easy way. All right. All right, so it's 9:11. We've been going for over an hour. Well, I think we covered some pretty good ground here. All right, let's go through the next tip. Years ago, opens higher, closes higher. Tip number 6. Years ago, I noticed that when price was higher an hour into the session, it often signaled a higher close. In other words, price would extend their moves during the last hour. I haven't checked whether or not this is still true, to what extent, but maybe it still applies and you can find it useful. Clearly, the major indices have started to make major reversals during the last hour. All right. There are a few, the most helpful ones I thought, this one can be the futures. It doesn't apply so much in crypto, but definitely good for commodities. Definitely good in commodities. The long shadows, those are good ones. The call candle retrace, or even just I see it as a trend retracement. The last one we got is underlying support and overhead resistance. Check the intraday chart to look for nearby support resistance. So check your daily support, find your daily support, your resistance there, your highs and lows, and if you find some, the market could turn around when it reaches those locations. Remember that support and resistance set up by prior peaks or valleys, round numbers, horizontal price movement, and similar patterns are not discrete prices, but tall areas. Price may hit a support area and dive well into it before turning. Now, everything that we got here, this is on the patternsite.com. And that's where everything is. This was a little dry. This was a little dry for me, and I hope I didn't bore you guys too much. But let me go to now. Let's see. We did this. I'm finding that. We'll just go over the 1, 2, 3 trend change, and this is like we're a downtrend. We got a downtrend. We're going to draw a trend line on the top of it, and in a nutshell, all this is a breakout resistance, retest of support, and then go up. And that's what we're looking for on a change of an uptrend, where we're trying to find when a trend changes. We will see this. We will see a downward channel or a downward trend, and eventually they will break out in reverse. And what are the things that we're looking for? We want to see it. Can we get that off? I think it's best just to draw it. You got price doing what price does, right? And you're tracking it, tracking the tops for resistance. Until one day she comes to an area and she decides to break out. And what we're looking for, basically, may not happen on the first thing, but we're trying. To see a trend change, you got to see a series of higher highs and higher lows. And we go back to basic market structure here with our highs and lows and lower highs and lower lows, and we say that ad nauseum: lower lows, lower highs, lower higher highs, higher lows. So we want that to change. And here's so this is our 1, 2, 3. Once we get above that, this high here, then we got a trend change. Until that happens, until you see that happen, well, I mean, there's lots of other things it could do. It could come down here and double bottom and do some other things. It may even continue down. Sometimes they do that. That sucks for a breakout. And what you end up with is, well, we thought it was a breakout, but it turned into an internal trend line, and eventually they will break out. But it sucks when you're expecting, oh man, we got a measure move, go to the upside, and it doesn't happen. So it's critical. And Joe talks a lot about this. This is this foundational knowledge here, what we're looking for. What we need to see is for a higher high. Now we got something. Now we got the workings on the trend change. Now WD Gann suggests, and so does Thomas Bulkowski in a different way in his dry language, that once you see a trend change, your best opportunity to get in is after you make that higher high, that next higher low. And that's when WD Gann says, that's when you need to go in hard, baby. He didn't say those words, that's me paraphrasing, but essentially that's it, because that's when your trend is going to start taking off. This is your juiciest entry. And I know a lot of people want to try, I'm going to buy the breakout, and they chase the candle all the way up sometimes, and you can still do that, because in the in the end of it, you still come out all right. But if you're trying to finesse your game, trying to fine-tune your game and add some rules that will be helpful and beneficial, buying this one here, you wait for the breakout, get this higher high, that next higher low, we go in. Yeah, 1, 2, 3. Well, plus my commentary on the entries and WD stuff, but that's what we're looking for. It's critical that we need to get over that. Now, some people will say that we'll wait till they get there and then we'll jump in. Now, I'm not for that, because you always get a higher high, you're going to get a higher low. So maybe some people, I say just wait here. But with me, my strategies are different. I like to, I track bottom trend lines, and I like, if I see a partial decline, which is what happens with these patterns. Now we're starting to get the patterns. We get a partial decline on these patterns. If I see that forming, or if I'm near a bottom trend line, I will build a position. I will nibble. I'll try to get in. I like to bottom feed. I'm a bottom feeder. And then I got opportunities here at the breakout. Here, I would not take that one. That's just me, because they come down. So enter, you go in the negative. I would rather try to stay in the positive as much as I can, because I can get into the negative just without any help at all. I can do that easy, just doing anything. So I know I can get in the negative here, so I don't want to. But downhill, when we come downhill, that's juicy. That's when I add to my bags, pile in. Let's go, baby, let's go, and let's hope this works out. So hopefully that made sense. It is 9:18. I've just got, here we go. I was going to talk about this. We start getting into trend lines. The whole premise of what I'm trying to do is we start getting into trend lines. We support resistance. We get into trend lines, and then we start getting into patterns. And the first pattern, and I talked about this, I think, on the last one. I think one of the most important patterns that I did not think was important until, was one of the last things to really click in my head, that I said, oh, that was gold, and I just overlooked it. I didn't think it had value, but it does. The channel. Once you accept the fact that price, if you just take the theory that price travels in channel, this whole game will change for you. There will be several game-changing moments, or it'll just be an aha moment for you. It will just make things easier for you to understand. It did for me. Once I understood that, and it just seemed like a boring concept, but it's you got water pipes. They're just water pipes. That's all we are, man. That's all these things are. They're just water pipes. Channels and channels. All right. And I've come to respect the angles of them. You can just draw one like I did here, or you can get kind of, start looking at angles, and the angles are respected. You'll find angles repeating in price charts. You just do. And that's a big thing, and that can be a predictor. And you can use channels to help you. If you're watching this over here, you don't know that it's going to reach over there, but if you extend your trend line, your channel line, you got an idea of where you can go up to, right? You see me do that a lot. You can use them as a predictive measure too. And I think Bitcoin price is beautiful. This is a beautiful example of that. When you come on a bigger ass time frame, like I don't know, like a weekly. Oh man, I'm gonna screw this one up. Thought it was one I could screw up. Yeah, we can screw this one up. When we take wick to wick, or even candle body to candle body, I've done it wick to wick on one of my charts that I was following here. You get to candle body there. General rule, I like to do candle bodies. There's some, you can switch it up, but you get the best results, especially in getting angles going from candle bodies to bodies, in my personal opinion. But okay, so these 2 points in that line just extends and extends, and then it was resistance here, and now it's actually, that's what our support is. That's what's holding Bitcoin up right now, is that line right there. Beautiful, beautiful, beautiful trend line. And as we are right now, we're in we're trying to do something like this again with Bitcoin. On the smaller time frames here on the daily, we're in a range, we're forming a channel, unless we decide to just go ahead and break on up to the other side. If not, we're starting to, we closed candles there, connect the dots, you start to see a rectangle. You start to see that we're in a channel or a bullish rectangle. This is accumulation or reaccumulation or distribution. All those can fall into this category here when it comes to these. But it's still a channel. It's just not the diagonal channel, it's a horizontal channel, and they're kind of a big deal. So rectangle tops, they could be a top, they can, in distribution. They can also be an accumulation, a continuation to the upside. It can be either reverse. I wouldn't look at them that way. Well, I mean, they could play either way. You got to look for signs or what's playing out in them, I think, for distribution. But let's go over this idea and let's see what he says about rectangle tops. You also have rectangle bottoms, just to show you that. I mean, down here where Bitcoin was, you had several of those ideas going on. Little channels within channels there. This is the channel it broke out. Wyckoff theory. I would think for a spring. I think she just playing us. I don't see the spring. Oh, nice double eve bottom right there. One double bottom and the even eve looks like a set of nice boobies to me. Or maybe it's somebody just hanging their butt off the windowsill. I don't know. That's the ones that Bulkowski's talking about being the best ones ever. He likes these. We do too. They're cutesy. Rectangles. Let's see what he has to say about them. Oh, this is. I was looking for your article on it, not necessarily your. Score your rectangle bottom. Maybe this is. No, that's too much. That will make your head hurt. Wouldn't want to do that. But let's take a look. Now here you would think this one would be continuation, but she wrote to the downside. That sucks. All right, Bulkowski. For more information on this pattern, read Encyclopedia Chart Patterns 3rd edition. All right, rectangle tops, horizontal channels, so-called because price enters the pattern from the bottom, creating a top. Upward breakouts are exceptional performers, but downward breakouts perform terribly. Well, that's worth noting. Upward breakouts are exceptional performers, but downward breakouts perform terribly. Important information in bull market results. We are in the bull market. We need to pay attention to this. Here we just got statistics for pullback rates and multipliers you can apply to measure moves and things like that. Its overall performance is 4 out of 39, one being the best. Pretty damn impressive for how it performs in that. So pay attention to channels because they mean something. So now we're looking at it as a top pattern, The price will lead into it. Prices have flat tops and flat bottoms, crossing the pattern from side to side, following 2 parallel trend lines. Volume tends to trend down 70% of the time. Let's see where we are now. Our volume is somewhat trending down. We had a little spike there, but overall in a downtrend. I'm not saying that this is a top by any means though. Breakout is upward 63% of the time. I thought you said it was a rectangle top. Well, it looks like a top, don't it? How many people are saying Bitcoin's topping out right now? I need to close the ones I don't have anymore, don't I? All right, so if price is coming in from the bottom to the rectangle, it's got a 63% chance to break upward. So keep that in mind. All right, and you got a measured move, which is just it's coming from A to B, the top to bottom, and you just put it on the top. Now he does have a multiplier here, which would shorten the measured move. I kind of find that a lot of times price exceeds the measured move, but he's got one for upward breakouts is 78%. So what that means, and we're going to get into measured moves right after this, mostly on trend lines. We did have that, right? Thought I already had that page pulled up. All right, so in a channel measure move is very simple, and you just do like that. Now I find that can be very helpful, but a lot of times you get some more. You might consider going from wick to wick, taking that full measure and then putting that at your breakout. That might be something I would probably use but it's a good rule of thumb. You can get better measure moves from rising wedges from some other patterns, in my personal opinion. I did want to get in on, you didn't go over measure move here, did you? I don't see that I have the one pulled up that I wanted to pull up. I was going to get into ugly bottoms and bottom patterns here. Can you do it? So, and some of the stuff that I put into the trading group was measured moves. And here we go on measure move down patterns and how you take a measure move and everything like that. There was still another one. Probably the next one I'll come back with the actual page and show you, but I want to show you what it is. When you got a trend line, and you'll see me do that sometimes, and it goes kind of, it may not look like it's following what the traditional trend line is for a pattern or something like that. What are you trying to say, Road Dog? Like, for instance, if this guy comes down and breaks his trend line like he wants to do per moving averages, I can see what you're doing. Are you gonna break it? Are you gonna break it? If it breaks that trend line, I got my trend line from candle bodies. Now, I'm picky on this, but I get good results from being picky on it, so I think that has something to do with it. Let's pretend that price does come down here. Our measure move, now we could measure a channel, but you'll see me, I will just take that last one, that last high. That's our measure move. The last little peak that you got there, it may be a small peak. Well, if she comes down and does like this, well, I might want to take both of them. I would take this one too, put that at the breakout. And more than likely, you're going to see price dip down there, and then maybe that's where she'll come back up, maybe do a retracement. She may do something, but that would be a first one. And then if she loses it, you got this one. But as a general rule, those work good for getting a place. And what a measured move does is tell you where price should. You should start seeing a reversal at those areas or something. You should start seeing some support there. There should be a reaction. So once that makes a target, those make good little targets to play on your trade and everything when you make a breakout. But just taking your measure move. But notice one thing, that I respect the measure move. There are some people that don't respect their measure move. They'll take it, and then I don't know why they even do it, but then they pull it down somewhere else, usually wherever Bookmap has a liquidation target. Is what I've seen one of them do a lot. And I hear this, and this has got to be OCD, but I've seen some of them, they'll take a measure move. Maybe they'll take a sideways one, or they'll have something. I've seen this a lot. They'll do something, I don't know, but they've got to take it, move it around to this, and that does not matter. You're just taking them. It's the measurement, and if you move it, you're screwing up your measurement, man. It's like taking a tape measure, measuring a wall, not looking at the price or not looking at what the tape measure says, but just retracting it and then going back and then trying to reproduce it somewhere. It's just, or not. It's sloppy. It's just sloppy in my opinion. But I gotta say, with the ones that do that, they're always finding new trade setups every day, and there's a new measure move every day. It's different from the one before. There's a new price target every day, different from the one before, and they're so far off, they're not ever hit that same day, and they're not ever hit within the, by the time they are hit, they forgot about it, and they're already looking for the next little flag, and it's just, if it works, I'm not going to badmouth it, but that kind of crap never worked for me, and it was just a lot of crap, a lot of wheel spinning, and there's better ways that I've found to work things out, and that's what I'm trying to share here on the channel. So I appreciate you guys hanging out. We got 11 of you guys here. It is 9:30. That is long enough for a class, but do you guys enjoy going over the Bulkowski stuff? Now I know some of it's kind of dry, but there were some things, but there's some other things that I posted over there. These were helpful. I mean, if you're can't tell if you're in a bottom, this is helpful. This is helpful because they come in some different shapes and everything. We'll try to go over some of these ideas maybe next time. But do you like the Bulkowski things? He's got some really good information. What I showed today was a little dry, but I can kind of pick some things out. But also to kind of eventually, I'll be showing you, spend some time showing you my personal techniques and what I've put together. I pull things from, I'm not like religiously a Bulkowski trader going religiously, Bulkowski said, so it must be. It's not like that. There's guidelines, but he was definitely opened my eyes to a lot of things. And then I've got other things that we drag in, like the Fibonacci's I get from Carolyn Broden, Frank, what's his name? I can't remember. Some other ideas that we kind of bring in. Skatecrow says, my wife's got a rectangle bottom. I just like bottoms. Yeah, bottoms. Joe says, the most frequently asked question I get is, what session do I trade? Answer, when my alerts go up that I sit on TradingView, because now the trade is ready. I wait for the trades to come to me. That's smart. I pay attention to the sessions, but I don't live by it. Now, there are some strategies out there like Trade Travel Chill. A lot of your intraday trades, if you're a day trader, that's when it's the most helpful, I believe. If you're going to be, doing scalping or day trading, that's when it's most helpful. So I know Trade Travel Chill and Traders Reality, both of their systems go through that kind of thing, and they got some good systems. It's just they're a lot more complex than some of the things that you need. It makes you have to think about things, and but I mean, you find what resonates with you. I don't find a need to have to worry about it, but I do pay attention to it. I got it written on my board over here. That's what I'm looking at, just to reference it. And sometimes, because the US session seems to be the most volatile. It works that way in Forex, and it works that way with crypto, and of course Wall Street. You only have, if you're trading Wall Street, you only have that session, right? All right, guys, I think I'm going to close this one out. I hope it's been an educational stream. I hope you guys got some insights on some things. I'm taking it a little slow and just trying to make sure we're covering some basic fundamentals, but then some interesting things too. But I thought it would be good to get Bulkowski's take on some of these things. And I really tried to find, I've got some guidelines, some tips on trend lines and things I put into a chart school video before, but I couldn't find it to bring it out. But just as general guidelines on some of these patterns and things can be very helpful. All right, guys, I'll see you tonight. And we'll do this again next Thursday, I guess 8 p.m. This time seems to be working out good for you guys. I'm still adjusting to it. My day's been a little bit off. I think it's reflected. I feel like I've had 2 chart schools where I just weren't able to give it the full Monty. But I do think that we did cover some good information here just to get some things. But going over, you know, that 1, 2, 3 idea, or just the trend line about what you're looking for to get in, that will help you to figure out when to get into a trade. If you know how to play your trend lines and know you got to get past, you need to see the breakout get past this and get the lower low. And that would tell you, I mean, you watch this thing play out. It broke out, man. She went up and I missed it. You're chasing candles when all you got to do, I mean, is wait for the next time. A nice little low. The retest would have been great. There's not always a retest, but a lot of times there are. More times than not, there's a retest. Sometimes you have to wait for it. Like here, you've been chasing this candle. Oh, we're not going to get a retest, but you did. You just had to wait. You just had to wait several hours, maybe a whole day before you got it. But it came. Then even deeper. All right, guys, I'll see you tonight. I got to get ready for the nightly stream. We'll be on in 10:30, about an hour from now, going over altcoins and the market in general. Bitcoin sitting at 104,400, dropping just a little bit. Thanks for hanging out, everybody. Sam says, I learned a lot of stuff and have you translate the material. I kind of had to. Listen, his books are awesome. But they read a lot the same. And I mean, if you want the books are great. I thought it was worth the expense, but everything he's got in the books are available right here. And he's got it. This is better than the books, I think, as far as just getting your information quick and easy. Getting your little identifications down. The book itself, lots of case studies and lots of talking about it. But I like to pick and choose some of his golden nuggets to share. He's got them in there. I just got to assemble them. All right, I'll see you guys tonight. Let me see. What else do we have? Scarecrow says, thanks, good job. You are slow, but I appreciate that. Yeah, I feel like I'm too slow sometimes. Galerian Marshmallow says, love it, man. Okay, cool. I don't want to bore you too much, but we did go over some boring stuff. One of my complaints was when I joined the trading group, what that guy would do was the educational videos. We'd just go over Investopedia. I felt like I was doing what he did, and just reading the article. No. And I don't want to do that. I want to try to sum it up for you. But the wealth of information that you can pick up from here is just astounding. Guys, I'll see you tonight. Thanks for hanging out. And let's go kill this market. Yay! Sean, take us to the end screen.
Come on, come here, bud. Come on. You freaky dog. I don't need to analyze. Every word that comes out is a lie. Make it look like you're so ice. You won't make it to the finish line. Now if you gotta know the truth was gonna let you go. You was fine, never mind, unpredictable. Feet high off the ground, you ain't no one. You a star, blow it up like supernova. In the nighttime, hit my hotline. Sharing secrets, you wish really was part your life. Basic bullets, with no bullets. Does your wifey know you're begging for my notice?